And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Wednesday, September the 8th, 2021. The market finally did provide enough information trade-wise for me to go ahead and label what the heck has been going on since we hit that high at 15,708.75. As it turns out, you can see by my labeling here, let me see if I can make this a little bit larger without that doing what it wants to do. Crazy thing, it's all about the mouse. And now I'm just gonna get this back down to my hourly chart. Let's see if we can do this again. There we go. You can see here is the minute wave 3. And then we did start to put in a minute fourth wave, and that's what I was looking for. Originally, I had placed the 4 here, but then actually here, but then we got another move, and then it did this, and then it did some crazies, and we've had several days of strong declines, followed by good rallies, followed by another strong decline. And so really what is now unfolding, as I can see, is A, B, C, X, A, B, C. So thus far, it ends up being a double ABC structure. And I have gone ahead and put minute 4 as the completion point right there at today's low of 15,523.24. And I'm giving you the benefit of the doubt that that did complete the minute 4 and that we now are in the starting phase of minute 5, which should rally up and start to, again, get to new highs, and that would be about 15,709, and then start heading up above actually 15,800 to complete the long string of fifth waves. We've got a minute 5 to complete a minor 5, to complete an intermediate 5, to complete a primary 5, to complete a cycle 5. We've got a lot of completion points coming up once we get up to these new highs. So now, what can we expect? Again, the market does need to give me additional confirmation on the hourly chart via a 5-wave structure up. I can't quite get that just yet. So I have to leave open the potential or the possibility that we're going to swing again and possibly put in an additional ABC. So but it has to be separated by an X wave, and that could be the X. And if we get another down, up, down, then it'll be a triple ABC. Not as common as these doubles, but as we have noticed during this entire topping process, we have had these elongated corrective moves in a fourth wave position simply because the market has not been convincing either to itself or to the players of what the next move should be. So it's taking longer, but I am feeling that today may have cleaned that up and given us the opportunity to go ahead and start to move back up. It did slip below the 200-day moving average today, but then it recovered it. All 3 times that it broke below, and then it recovered and did so nicely at the last time it went down. So what can we expect for tomorrow? I am anticipating that the market will continue to move higher, that any selling will be held by the moving averages and some additional support coming off. If the market breaks back below this 200, we do have a little bit of additional room because it came right down almost to the bottom of what we would label. Here's the previous 4, and it exceeded that by a little bit. But we do have some additional support down here at, that's again 23, and that's where we got to today, and that held. Now below that, we have 15,500, and then it starts to break below 15,500. Where it cannot break is 15,397. That would then invalidate any additional rally for right now and suggest very strongly that the highs are in for now. But these patterns coming off don't support that. But again, the market could throw us another wrench and throw a whole bunch of stuff at us tomorrow. And that should not really affect us other than what we can expect coming down the road. But in terms of trading, as a day trader, as a swing trader, as even as a position trader, you must trade with what's in front of you and you must react accordingly. Now, as a day trader, I don't particularly care if it goes up or down, just do one or the other or both and be volatile enough that we can make money. And so if the market continues to swing around and turn lower, then we can fill in the blanks. We can put an additional line of defense in here. Actually, let me move that down. I'll just show you. I can put Fibonacci retracements on here, and that'll see, we can see where else we would have support coming off. 49, okay, we're just going to go right there. And you can see we have 35 that was broken today. Next up is 15,482. And then we have 618 at 15,428. Those all still would keep alive a minute fifth wave up. It may not get as high as we think, but we still would get a fifth wave up. And what I want to add is it becomes more difficult as we struggle through this topping process. I think it's just the impatience on both sides. The impatience of the bulls wanting it to go up, the impatience of the bears going like, no, we're done, we're just going to sell. So when you've got that push and pull going on, it produces a lot of very choppy trade, a lot of quick volatile trading, and we're seeing all of the above. And that's how it's kind of been as we've come off of the fourth wave, which is back down below here. Let me just take this up one tick so we can see. So it's been kind of from first of all, from here, it's been pretty straight up. But then once we got through this complex, that complex wave 4 right there. Look at that one. Boom, 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 boom. That ended up being a triple. Now we're doing a double for the minute 4. So there was the minor 4 and it was complex. But when we were done, boom, it rallied. So not as intense, that's not what I'm expecting now. But again, if it's done, I expect the buyers to kind of come in and take the market. Let's go, let's do it. And so that's my anticipation, my expectation. But we may turn lower. We cannot discount it. We cannot toss it out the window and say it's not going to happen. And if it does, we have our levels. And if it does, it's going to be tradable. So we continue to feel that if the market wants to show weakness, then at least on the 4-hour, the 200-day sitting way down there. And I know it's going to be a little clogged up there, but we can take a look at the daily. And on the daily, it's just really been in an area of a big box for the last 7-8 days. So all the way through here, it's just kind of been sitting in a box in terms of the high and the low and not really trading too much outside of it. So on a daily basis, we're not really seeing any signals that of market weakness, at least on a daily chart. If that starts to show market weakness, then we're likely going to be breaking this number, the 15,397, and that would then definitely be displaying market weakness. And then we have the 200, et cetera. So complexity and a topping process, absolutely. And we can see it, and we've seen it again. So to believe that it's over, yeah, you might, but I think I still need to let the market top. That's how I operate, and that's what I'm going to go on. And so for tomorrow, I think, again, that we should continue to see the rally. If the market turns lower and again breaks below this 200-day moving average on the hourly chart, and that's at 15,568, that's going to produce a negative reaction, from the market and from the players, but it is likely going to drive us down to 15,482 or 428. And that's about as low as I think we should go. Below that, we're breaking below that number. So we have to allow for this. We might get it. And then we'll just see what goes on from there. But upside, we're going to find resistance here. And what I want to do now is actually, I want to take off this particular, the retracements. And now I want to put back on the extensions. So we can see where now what our possibilities are. Where our possibilities are. This is going to be a pain for me. There you go. For a minute fifth wave advance. Okay, I need to adjust that level. Let me pull this open just a little bit and make my one adjustment because it's not correct on that endpoint. The endpoint is 15,000 to 2375. Okay, 708.75. So let's correct those and let's get that corrected there. Okay, so we continue to get our overlap above 15,800. So this line represents where minor wave 5 would be 50% times the length of minor 3. That's at 15,004. 618 level, or excuse me, that's 15,806 would be the 50%. The minute wave 5 would be 61 or 62% of the length of minute 3, most common, again, right there at 15,504. So we got 504 to 6 as a very likely target. If we continue to look higher, our next zone remains between 15,977 and 16,063 to 84. And that's where at 16,063 is where minor wave 5 would be 62% times the length of minor 3. So, and these are the intermediate levels. So we have the next one up, the intermediate would be intermediate 5 equaling intermediate 3, and that comes way up here at 16,384. Can we do it? Sure. Stranger things have happened, folks. And I don't know what it'll take to blast it out of there, but it can do it. I'm not expecting it, but that doesn't mean it won't happen. So right now, I think if we can continue, we need to get quickly back above 15,700. And if we can do that, then I think that we should get back above 709 and start heading up to 750 and then get up into these zones. Again, it's going to be structure. We're looking for 5 waves up. And I have no doubt in my mind that within this 5th wave, it will subdivide, at least into 1, 2, 3, 4, 5. And I would expect that the 3rd wave will subdivide in and of itself. So I think we have a fair chance of getting above 15,800 before all is said and done to complete this move. We're in, if indeed it is going to be minor 5, again, I'm going to say, I know I'm preached to the choir, but we're in that final leg. And I've been very careful about counting this out, make sure that I'm including every squiggle, every line, every move, and being able to explain what was going on and what we can expect. So my expectations remain here unless we break below 15,397. Then it's done. In my mind, it would be done. Now, if it breaks below that level, I think it's just going to keep on going. So I definitely would want to see it come down, test it, break it, and then shoot itself back up, because that would make a mess of the charts. But again, stranger things have happened. So I'm going to conclude here that I believe that tomorrow we will likely should see a continuation of the upside. Downside breaks are a possibility, but we need to see a break below 15,568 to really kick into gear to the downside. And then that will likely move this forward. So because then I'd be looking for new lows below where we were today. And again, we know where those are. We have 15,004. I don't know right off the top of my head, but I would put them back on so that I can see exactly where we can find some support. But we have it pretty much all the way down to just above 38, I think, or 32 down into here, but then we don't break below 15,400. So we have a 50% level and we have a 0.618 level, both for wave 4, and that can happen. Upside, I'm looking for it to break above there. I'm looking for it to break at least above this 15,697 and get itself back above 15,700, and then start building from there. So that's it for today. The next update will be on Thursday, September the 9th.